Welcome to The Explainer. Today, we're diving into Amazon's latest earnings, and wow, what a report. It didn't just beat expectations, it completely changed the story on who's actually winning the AI race.
Okay, so what was the one thing that got everyone talking after Amazon's Q3 earnings? It all came down to a single, powerful number. A number that honestly sent shockwaves through the market and just completely changed the conversation about Amazon's future.
And here it is, 20.2%. That, my friends, is the year-over-year revenue growth for Amazon Web Services, or AWS. And look, to be clear, this isn't just a good number, it's a massive re-acceleration. I mean, this is the fastest AWS has grown since all the way back in 2022. And this one number, it's the key to unlocking everything else we're going to talk about today.
Okay, let's break this down. What does that 20.2% times really mean for Amazon and for the whole tech world? Well, to figure that out, we've got to zoom out a bit and look at the full earnings report. Let's see the big picture. Just look at these numbers. I mean, they didn't just beat, they blew past expectations. Total revenue? Beat. That's good, but the real story is deeper. Look at the earnings per share, $1.95 versus the $1.57 expected. They absolutely crushed it. And a huge chunk of that came from a massive $9.5 billion gain from their really smart investment in the AI company Anthropic. And then there's that last number, the CapEx, $125 billion. That is a gigantic bet on building out the actual physical infrastructure for the future of AI. So you gotta ask, right? What is firing on all cylinders to make this happen? The answer is really in how Amazon is built. Think of it like a three-engine jet. The company has these three incredibly powerful pillars. And AI, well, AI is the jet fuel that's now supercharging every single one of them. And this right here, this is where it all clicks together. See, AWS isn't just some cloud service anymore. It's the literal foundation where the whole AI revolution is being built. Then you've got the advertising business, which uses AI to make a ton of money from all that shopping data. And finally, the e-commerce business, the one that started it all, is using AI to get ridiculously efficient. Let's dive into each one. All right, first up, AWS. Let's be real, it's not just a leader, it's the undisputed king of the cloud. We're talking about controlling nearly a third of the entire global market. That scale is just massive, and it gives them this huge cost advantage that's frankly almost impossible for competitors to touch. That's what you call a powerful economic moat. But here's the thing, AWS isn't just about storing files anymore, not even close. It has become the engine room for enterprise AI. Think about services like Bedrock. It's like a playground for businesses, letting them try out all these different AI models from different companies super easily. And then they're building their own custom AI chips, Trainium and Inferentia, to make it all cheaper and faster. What they're doing is building this complete, all-in-one ecosystem for AI that companies are starting to realize they just can't live without. Okay, engine number 2, advertising. This thing is on fire, growing at a blistering 23.5%, and it's a high-margin machine. What's the secret sauce? It's using AI to comb through this treasure trove of data that nobody else has. I'm not just talking about what people search for. I'm talking about what they actually put in their carts and buy. That insight is pure gold, and they're turning it into a huge profit center. And finally, we can't forget where it all started, e-commerce. This is where AI is quietly working its magic to boost profits. I mean, picture this. You've got AI-powered robots zipping around warehouses. You have AI optimizing delivery routes on the fly. All of this is driving down costs and making their retail business way more profitable than it's ever been. Okay, so it sounds like a perfect story, right? But it's not all smooth sailing. To really get the full picture, you have to look at both sides. We have to balance these amazing strengths against some very real risks and challenges that Amazon is up against. So on the one hand, you've got some huge positives. That Anthropic partnership, that's their answer to Microsoft and OpenAI, a massive strategic win. They're also being really disciplined with costs, and they're making these huge new bets like Project Hyper for satellite internet. But on the other side of the coin, the competition from Microsoft and Google in cloud is just brutal. You've got regulators constantly breathing down their neck, and that giant CapEx number, that $125 billion, it's a great long-term bet, but for now, it definitely puts a squeeze on their cash flow. All right, so we've looked at the fundamentals, the growth, the moats, the risks. So what does the market think about all this? What's the stock chart telling us? Let's take a quick look at the technicals to get a feel for investor confidence. And what we're seeing is that the chart is basically backing up the positive story. You have key indicators, like one called the MACD, that looks at momentum, flashing a strong buy signal. Another one, the RSI, which kind of measures buying pressure, is looking really strong, but it's not in that overbought danger zone yet. That suggests there could still be room to go up, and you're seeing it in the analyst targets too. They're raising them up into that $272 to $315 range. Confidence is definitely high right now.
Okay, so let's put all the pieces together. You've got the shocking earnings beat, you've got that powerful three-engine strategy, and you've got the market's positive reaction. So what's the bottom line? What's the real investment case for Amazon today? Well, in the short term, the outlook is definitely bullish, mostly because of that AWS growth picking up steam again. But the long-term story, that's where it gets even more compelling. The argument here is that Amazon becomes a core part of your portfolio, a really high-conviction holding. Why? Because their strategy isn't just about using AI, it's about dominating the entire infrastructure layer that the AI economy is being built on. And that brings us right back to that mind-boggling number, $125 billion in a single year. You have to understand, this isn't just a cost on a spreadsheet. This is a deliberate, aggressive move. They're pouring that money into data centers, into their own custom chips, into the raw power needed to build a moat so wide and deep that no one can cross it for the next decade of AI growth. So the key takeaway is really this. The argument goes that investors shouldn't be scared of this spending. They should be excited by it because it's not a cost. It's an investment in total dominance down the road. The thinking is, as long as that AWS growth number stays strong, anytime the stock dips, it's just the market putting it on sale. And that leaves us with one final big question to think about. Is Amazon just another horse in the AI race, or is it the company that's building the entire stadium where the race is going to be run?